Hi everybody, this is Sentiment Timing, a weekly video recap for Wednesday, July 8th. I hope you guys are able to manage this very volatile market, and let's get started. So tonight's video is going to be a little bit different. I'm going to be doing a little bit more on the technical aspect because I've already sent you the last two premium reports. I had to remove the turn dates because it's not fair to our premium members, but you get a pretty good idea as far as what Woody's been saying and and thinking. So at Sentiment Timing, we believe that human beings and the markets are irrational, and there's always going to be an irrational element in the market, and that's what creates market opportunities. Now, we look for these irrational elements through Woody's proprietary sentiment database, as well as his proprietary technical timing indicators, and that's where we decide whether you want to be looking long or short, depending on the turn dates and what he thinks. Now, we're just more of an informational newsletter, so we're not giving you actual trades, but you get a pretty good idea as far as what is going on. So back in May into June, we had a series of very high sentiment readings, and this was what Woody was calling the end game, and it was because you just had everybody was bullish on the market, but yet what was happening, we were getting these series of 90% readings, and the S&P was not making new highs. So this was deemed a very, very important top. It was actually especially right at the 622 right here. So that kind of changed the dynamics of the market, where it's been very easy for the bulls, and they've been buying the dips and making a fortune, and now things are changing, and until we start hitting our our next turn dates, which have been identified for the last couple weeks actually. So we know just to keep shorting until we get into the time period when we're expecting some type of bounce, and then once it's safe to start buying, we just I'm going to start buying again. So we've had some low sentiment readings as well, but the thing is, we're not really near any important turn, so it doesn't really match up. It means that yes, we may get some bounces, and we may get a bounce as soon as tomorrow, and I'll show you why on the technical aspect of things. But it's not going to be, and they shouldn't say yield important new highs. They're going to be rallies that fail, and what you really want to do is when when the bottom is supposed to come, you short rallies at the resistance levels. So if we take a look at our at the S&P here, this is the 60-minute chart, and really this is the bullish divergences here, where you can see the price oscillator is making higher lows as the S&P is making lower lows. So that would hint that we could get some type of rally. Now, the fact that we are in an intermediate term downtrend, it doesn't always work this way. These divergences get wiped out. But if you're just looking at it on a technical aspect, it would make sense for a bounce. So me personally, I wouldn't be getting aggressive on the short side, just because we've had a nice move down. We have bullish divergences, and we have sentiment that's at some low levels. So all you'd be looking for is some kind of bounce, and what you want to do is pick and choose where the bounce is going to fail. So you have 2072, 2076, and 2086 are your really, resistance areas. And if they give you a real good pop, which it's a possibility in this market because it's moving very, very fast, we will probably see a move up to the 2096. Now, there's a chance that we keep heading down, and the reason why we have some support at 2039, but if that gets taken out, really the next move is coming all the way down to the 2016. This is a 38% fib retracement from this low to this high, but if you look, it's also support right here. So it's as much as yes, the 60-minute chart is saying that we could get a bounce. If it fails, we're probably going to have a very quick move down to the 2016, and this would be the next area that, if you were going to try it alongside, you can try it. Me personally, and what I trade right now, being that I'm only looking short until where the expected low is going to hit. All I'm doing is stepping aside, and I'm going to wait for the rallies to exhaust themselves, and go short and just take these easy trades to the downside. So that's pretty much it. And now, what I run marketspath.com also, and I had this before I started Sentiment Timing with Woody. And we really just trade IWM, and I do options. It's more of it's a technical service, more trade orientated. It's not the information like Sentiment Timing. But the thing is that I'm able to use my technical skills and match them up with my the knowledge that I get from Sentiment Timing. I don't give any dates out on it, but it allows me to make trades in this thing, and this is just going. This is the last 2 days. I've been shorting IWM, and you can see I made $1,750. And the important part on it is that I haven't. These are two separate trades. I used $1,250 on one, and I used $21.75 on the other. So they were only 10 contracts. I wasn't risking a whole lot if I was wrong, and ended up making $1,750. Now since June 8th, I've had this one losing trade, and that's because IWM was acting a little strange and not really following the indexes. But in any case, I'm $2,400, and again, each one of them was not I was risking $2,000 really to max on a lot of them. That I don't really go too much higher than that. And things have been pretty good, and it's just being able to match up the technical aspects with with the sentiment and the turn dates, knowing what to do. And again, I don't give this information to my MarketsPath people. I just make the trades, and they just trust my knowledge on it. So the thing is, when the IWM, which is the Russell 2000 ETF, and the spiders move together, and you get these moves like we've seen, you make a fortune. It's very easy. It's when you start getting into areas where IWM starts going one way and the S&P the other, that's where things get difficult. But it seems like everything is starting to line up again. And again, when you know when the turn dates are and when things are happening, it's not that hard to put your technical skills together, and that's what I do with my members. So one thing I wanted to just kind of offer here, and it's like I said, I do this with marketspath.com. I've been running it since 2004. What I'm willing to do is I primarily really been focused on Sentiment Timing, and anybody that is that wants to join, the special is not the same as the $79.99 like it was. It got moved up. But if you join, I'm going to give you a free membership to marketspath.com if you join Sentiment Timing. You remain a free premium member of MarketsPath as long as you remain a member of Sentiment Timing. If you decide you ever wanted to just do MarketsPath, you can do that. But for this, because it's I primarily just do Sentiment Timing with the promotions. If you remain a member, I will leave you as a premium member of MarketsPath. Now, my subscription, I don't know what this is right here. I can't get rid of it, but the subscription is typically $79.99 a month. And I'm a technical trader. I use options. I trade IWM, which is the ETF for the Russell 2000. But each night I go over the S&P in my video reports. So what the MarketsPath, really what I do is you get morning notes. It just kicks off your what I see happening from the overnight markets. I do nightly video reports, and I do email trade alerts, and we have a trading room that you can enter, so you'd become a full membership of MarketsPath. If you join Sentiment Timing and you want that, you just send me an email. This is my address right here. I'll have you set up in a day, and that's really about it. So until next week, trade carefully and have a great week.